And welcome back. And here's your latest California housing market update. The California Association of Realtors just announced August numbers regarding home sales, home prices, the share of price reductions, and much, much more. So I'm going to give you guys some insights regarding what's happening right now in the California housing market, including a detailed analysis about home prices at the statewide level here in California, which you will not see anywhere else because it's based on my own data here, based on my own analysis of the California Association of Realtors data. That's what I meant to say. Anyways, I have a lot to share in today's video. And by the way, if you guys are new here, I invite you to subscribe right now because I post frequent housing market updates so you guys can make a more informed decision about whether to buy or sell a house. And with that said, let's begin today's video. I want to share some slides with you guys first, and then I'll share my detailed analysis regarding home prices at the statewide level here. So here's what's happening right now in California. Home sales still tanking, down by 18.9% compared to August of 2022. Also down by nearly 30% year to date. The median sold price is just under $860,000 compared to around $400,000 at the nationwide level here. And at nearly $860,000, this is up by 3% compared to 1 year ago. Meanwhile, the unsold inventory index is at 2.4 months, slightly lower than last year, down by 14%. Also, days in the market is at 18 days. This again is a time frame when you list your home for sale until you accept an offer from a home buyer. That's days in the market, nearly 3 weeks right now, and down by 22% from 1 year ago. Okay, let's talk about home sales, and then I'll discuss home prices in California. Home sales continue to decrease here, down by 5.3% compared to last month. This number right here at 254,000 is the seasonally adjusted annualized number of closed home sales this August. So what they do there is they look at the number of closed home sales this August, multiply it by 12 to annualize it, and also do a seasonal adjustment here as well. So about 255,000, again, down by about 19% from 1 year ago. Something worth mentioning as well is what the California Association of Realtors mentioned. It says the monthly decline, down by 5.3%, is the third consecutive decrease. However, on a year-over-year basis, this marks the 26th consecutive month of decreases. So we've had more or less a decrease of closed home sales on a year-over-year basis going back to mid-2021. Absolutely crazy. Also, as you can see right here, home sales fell off a cliff in 2022. And this year, we're still at really low levels, more or less the lowest levels going back to approximately 2008, excluding the onset of COVID here. And of course, excluding the last half of 2022 as well, where home sales were absolutely tanking here. So, like I mentioned here, home sales have now decreased for 26 consecutive months. They fell greatly starting in mid-2021, have been falling ever since then on a year-over-year basis here. Something also worth mentioning as well, this really caught my attention at least. Look at this. Home sales for the month of August, this is the change in the number of home sales by each of these price ranges compared to August of 2022. So for closed home sales for over 2 million, that only decreased by 1%. Compare this to a 25% decrease in the range of 0 to 400,000. I don't know anyone who's getting a home for $0, but let me know if you guys got a free house. Anyways, this 1% decrease in multi-million-dollar houses here is not as bad as the decreases of less than $400,000. So it appears that sales in the more affordable range are decreasing faster than multi-million-dollar properties here. Something worth mentioning as well is that even though home prices have been on the rise for most of this year, partially this is due to the fact of a mix in home sales here. So for the month of August, approximately 32% of all closed home sales were for $1 million and higher, compared to 24.8% for the houses that sold for less than $500,000. So one of the reasons why prices have been increasing is due to a mix in sales, more expensive properties selling compared to more affordable properties here in California. Here's also something worth mentioning as well, because the number of contracts being signed for existing houses, and by the way, I should mention this at the very beginning of this video here, the stats I'm sharing in today's video, unless otherwise stated, are only for single-family existing detached houses. So these are single-family houses and not new home construction and not multifamily properties either. So pending home sales, a measure of contracts being signed between buyers and sellers, fell greatly in August, down by 23.2%, which to me makes sense given seasonality of our housing market, but also because rates have been above 7% for nearly 2 months now. Also, something worth mentioning as well is this 23.2% is below levels back in August last year when a housing market was cooling off greatly as well. So it's really telling us that the number of closed home sales will fall greatly in the next 1 to 2 months as well. Again, due to seasonality, but also due to a spike in rates as well. So let's talk about the fun stuff here, home prices here. So the median sold price in California was above $800,000 for the fourth consecutive month, up by 3% on a year-over-year basis and up by 3.3% month over month. So keep in mind here, the all-time record high was set back in May 2022. I think it was 893,000, if I'm not mistaken, just under 900,000. Now it's at $859,000. Also, something worth mentioning is this 3% increase compared to August of 2022 is the highest year-over-year increase since June of 2022. But based on my own analysis, the gain of 3% is much lower than historical averages going back to 2010. So let me share exactly what I mean by this. So at 859,800, this is the highest levels since May of 2022, which is absolutely crazy, right? The only other month in the past 15 months in which prices were higher than August's numbers at 859,000 was when we had all-time record highs back in May of 2022. Just a little bit higher compared to June of last year at 858,800. But pretty crazy to see a 15-month high in home sold prices, even though rates remain very much elevated. Here's also something you guys should be aware of as well, because the year-over-year change up by 3% this August marks the second consecutive month of year-over-year gains. Keep in mind, before that, we had 8 consecutive months of decreases from November 2022 through June of 2023, decreases on a year-over-year basis. This is also the highest year-over-year increase since June of 2022. This gain of 3%, the highest since June last year when we saw a gain of 4.8%. Like I mentioned earlier on this video here, this gain of 3% is still much lower than historical averages going back to 2010, and also when looking at pre-pandemic levels as well, which I'll share with you guys here in just a little bit. Regarding the month-over-month change, an increase of 3.3%. This is pretty wild because prices have increased in 5 out of the last 6 months. So that was in March, April, May, and June. We saw gains on a month-over-month basis. Last July, or I should say last month in July, we saw a decrease of 0.7%. So prices have been increasing in 5 out of the past 6 months. Also, for comparison's sake, prices only increased by 0.5% in August of 2022. Now they're up by 3.3%. This implies the market was slowing faster last year compared to this year. Now, what's different about the year-over-year change compared to the monthly change is this gain of 3.3% is actually higher than historical averages, whereas the gain on a year-over-year basis up by 3% is much worse than what we should expect to happen in California here. So, of course, I have a lot more to share regarding trends in housing market and home prices in California. So let me just dive in right now. So this is what I did. I looked at the average August year-over-year change going back to 2010. The average was a gain of 8.7%, whereas this year we only saw a gain of 3%. So the changes right now are below levels than what we should expect, historically speaking. However, on a month-over-month basis, though, this is the average August month-to-month change going back to 2010. The change from July to August each and every year going back to 2010 is an average of a 2.1% gain, whereas this year we saw a gain of 3.3%. But wait, there's more, because I want to look at how is this change this August up by 3% from August of 2022. How's it compared to pre-pandemic levels? So for example, back in 2018 through 2019, we saw a gain of 3.6%. This is compared to the 14.5% increase we saw in August of 2019 through August of 2020. So this 3.6% increase is a little bit higher compared to what happened this August. Also, back in 17 through 18, there's a gain of 5.4%, obviously lower than the gain we're seeing right now as well. And just for fun, I included this. This is a change in home prices. And anytime I talk about home prices, I mean the median sold price in California. From August of 2008 through August of 2009, a giant decrease of 16.8%. But wait, there's more, because I want to look at how the changes in prices, how they compare to the lows we saw back in February, and also the highs we saw back in May of 2022. So the gain in prices from February's trough, which was a 2-year low back then, was a 17% increase in prices. So the median sold price in California went from $735,000. Now it's at nearly $860,000. That's a gain of 17%. This is one of the reasons why home prices have been getting a little bit higher compared to a year ago. So for example, back in April this year, it was a decrease of 8.2% compared to April of 2023. But look what happened though. Every single month after that, the decreases actually got a little bit more narrow. And then in July, a gain. And then in August, another increase as well, up by 3%. So one of the reasons why we're not seeing the big decreases like we did in the early parts this year is because home prices were increasing from March through June this year, and then again in August this year. And therefore, because prices have been increasing in 5 of the past 6 months, we're only down by 3.7% from the all-time record high. So the all-time record high, again, was set back in May of 2022. The current levels at 860,000 is only down by about 3.7% from the record high of 893,000. Now, here's where it gets interesting, though, in my opinion, because the correction we saw last year, this was from May of 2022 through the trough, which is the low point that was set back in February this year, was a giant decrease of 17.7%. So because prices have increased by 17% ever since February, that's why we're only down by 3.7% right now versus the 17.7% decrease we saw during last year's correction. So even though prices are down by 3.7% from the all-time record high from May last year, it's still better than the 17.7% correction that we saw from May through February this year. And also, if you guys are just curious, here is the gains in prices over the past 3 years. This is August of 2020 through August of 2023, up by 22%. All right, with that said, let's get back to the slides here from the Realtors Association. But leave me a comment below with your thoughts regarding my analysis here regarding prices in California. This video tends to take me hours to make, but actually it's one of my favorite videos to make anyway. So even though it's timely or not timely, it takes a lot of time to make these videos, I still enjoy them. Let's get back here to their slideshow here. So condos, look at this. Condos have been creeping up. For the month of August, the median sold price is $657,000, up from $620,000 from a year ago. Also, something that I don't really follow too closely, but I know a lot of you do follow it, is the price per square foot in California is at $417 right now, up by 2% from last month. and an increase of 3.2% from 12 months ago. Meanwhile, the sale price to final list price ratio is flat over the past couple of months now. The ratio is at 100%, which means on average, home sellers this August sold their houses for their final list price here in California, flat compared to a year ago, or flat compared to last month. Here's something kind of a new trend as well, because for the first time in several months here, more often than not, homes are actually selling for less than the seller's asking price. So the share of houses that sold over the seller's asking price was 47.4%. Again, this marks the first time in 3 months that it dipped below 50%. Of course, when it dips below 50%, this means on average, home sellers are selling their houses for slightly less than their asking price compared to the giant increase we saw back in April of 2022, when at that time, 73% of all houses that sold that April sold above the seller's list price. If you guys follow the channel, you guys all know I always talk about a challenging market for home buyers because of affordability constraints that home buyers are facing. That's due to elevated rates and, of course, elevated prices as well. So here's a really good snapshot showing just that. So the average rate 1 year ago, I believe this is according to Freddie Mac, was only 5.22%. Last month, it was at 7.07%. So rates have nearly increased by about 2 percentage points in about 2 years, which is causing this right here. So even though prices have only increased by 3% compared to 12 months ago, we saw a giant increase of 25.3% in your average monthly mortgage payment. And that's really primarily due to the fact that rates have increased from about 5.2. Now they're at about 7% right now. And actually at the time of filming this video, which is on September 19th, average rates for 30-year fixed for people with great credit is at 7.3%, according to the Mortgage News Daily. Can you say a lack of housing affordability, which should limit closed home sales in the following months here? Speaking of that, let's talk about inventory levels. So the month supply is at 2.4 months. 1 year ago, it was at 2.8 months. Relatively low levels still here over the past several years, and obviously well below the giant increase we saw in 2007 and 2008 when the month supply was about 16 months. That's absolutely crazy, right? This basically means that back then, at the current sales pace, let's just say in September of 2007, for example, based on the sales pace back then, all the houses listed for sale would take 16 months to sell at the current sales pace if no new listings were to be listed for sale, versus 2.4 months this year. This is a really good snapshot regarding the number of houses actually for sale in California over the past several years, going back to January of 2018. So the number of houses for sale have been increasing for the past several months here, but still remains well below pre-pandemic levels. A really good snapshot is this right here. Active listings have been falling below last year's levels for 5 consecutive months now, down by 27.7% compared to August of 2022. Much different than the giant gains we saw in 2022 through the early parts of 2023. So for example, in late 2022, inventory increased by a whopping 80% or nearly 80%. Now it's actually down by nearly 30%. So one of the main reasons why inventory is not increasing like it did last year is this right here. The number of new listings have now decreased for 14 consecutive months on a year-over-year basis, down by 17.5% from 12 months ago, which is this right here, giant decreases in the number of people deciding to list their houses for sale because a lot of people have rates far below 7%. So why are they selling, or why would they decide to sell and give up their historically low rate here? Something I really love how they share this is that they look at the number of new listings each and every August going back to 2018. So for example, The number of new listings this August at nearly 19,000 is down by 34% compared to August 2019 and down by 42% from 2018. So because we're seeing this lack of new listings hitting the market, this is one of the main reasons why inventory levels remain at historically low levels. The California Association of Realtors also provided this chart as well, which really tells a story regarding why our inventory levels, why did they absolutely decrease greatly in 2021 and the early parts of 2022, and why did inventory absolutely increase so much in the last half of 2022. So it's a really good depiction here because they provide the correlation or the relationship between new listings, which is the blue bars there, and the number of closed home sales, which is the orange bar. Back in 2021, we had a lot more closed home sales than the number of new listings. So because we had more sales than new listings, inventory levels were decreasing greatly. This is exactly the opposite back in 2022, though, because we had far more new listings, especially compared to, or especially in the spring months 2022 compared to sales. So because we had more new listings than sales, inventory levels were increasing. Right now, what we're seeing, at least for the month of August, again, around 19,000 new listings and about 16,541 closed home sales. So therefore, new active listings are barely replenishing closed home sales. And because of that, inventory is still remaining at very low levels. Also, let's talk about market competitiveness. So regarding the share of price reductions statewide, this August, it was at 33.5%. The median reduction amount, this is the more or less the average amount that home sellers are reducing their asking prices, is at 5.2%, which is this gray line right here. What I'm more focused on right here is the share of price reductions, though, at 33%. This means that approximately 3 out of every 10 houses for sale in California have already reduced their asking prices. This has been increasing steadily this year, but we're still well below the levels we saw in 2022 when it peaked at around 45% in late last year. Also at 33.5%, this is more or less on par with historical averages looking at pre-pandemic levels. And with that said, please comment below your biggest takeaways from today's video. My biggest takeaway, honestly, is the giant surge in prices. I mean, the highest prices we've seen since we had all-time record highs set back in May last year, due to a lack of supply and a lack of new listings hitting the market as well. But will that change? Remember, we saw a giant decrease in the number of contracts being signed, so that should limit closed home sales in the weeks and months ahead, and therefore that also should increase inventory levels as well, as it takes longer for houses to sell, and we've seen fewer contracts and fewer closed home sales as well. But what's your biggest takeaway? Please leave a comment below. Hope you guys have an awesome day. Like and subscribe, and I'll see you in the next video.